Welcome back to the Stock Operator channel. Every week, I sit down and walk you through the real numbers and the real strategies behind managing a 100,000 diversified portfolio I've made for my newborn son. This account started in January with $100,000. And one rule is simple. I don't want to deposit any more money into the account. I just want it to grow on its own over time for my kid. So as of October 2nd, the account sits at 123,742. That's up 7.8% for September and 24% year to date, right in between our target of 20 to 30%. For comparison, the S&P 500 is up about 15% this year, and that means we're ahead of the market with a bond-heavy, covered call-heavy portfolio. And that's the first key takeaway this week. You don't need 100% stock allocation to compete with the S&P 500. Thoughtful diversification can outperform. So here's how the portfolio breaks down right now. We're about 34% in small cap equities, 24.5% in international equities, 22.5% in fixed income, so like long bonds, preferreds, baby bonds, etc. 10% in options, so we got leaps. We have some tactical put spreads and some currencies. 7% in large cap tech, like Amazon and Tesla, and we have some in a Bitcoin covered call ETF. So notice this isn't tilted one way. It's spread across growth and income, domestic and international, equity and debt, and I manage this with a simple Google sheet. If you could track your grocery list, you can track a portfolio. That's the power of this system. It's not as hard as people make it out to be, or confusing as people make it out to be. So as you can see here, this is a heat map of the weekly performance, and we have a lot of bright green and we have some bright red. What I want to do is outline some of the bright green, or the stocks that have done really well this week, so that you guys can kind of look into that and say, okay, this sector's doing really well, or hey, this sector's not doing so well. So as you can see here, we had INOD doing really well, Tempest AI doing really well, apps doing really well. And what I want to do is kind of dive into the charts and just show you guys what I was thinking when I entered and how I managed it, because as I told you guys, I'm actually selling calls on some of these positions. So it's really important to share with you guys how I manage those calls throughout holding this stock for multiple months and to hold it in the future. So this week, a few names really stood out. So first of all, like I said, INOD, ticker symbol INOD. This is an AI infrastructure play. So it's up over 140% in September. And we've managed this with covered calls, rolling strikes higher as the stock ripped. So without management, we would have capped our gains entirely. But with management, we captured the upside and lowered the volatility, because as you could see, it went sideways for months before this giant rip in September. And we were selling calls the whole time. So we made a lot when it went sideways. And then when it started to go up, we managed it effectively so that we didn't lose too much on rolling the calls as it ripped to the upside. So the next stock is Tempest AI. This is a healthcare AI company, another triple-digit mover since we've owned it. And here's where the covered calls worked exactly as intended. We collected premium and still rode the move higher. So with this one, we're up almost 100%, and we've been selling 20, 25 delta calls the entire time, and we're not down on those calls, which is pretty remarkable. We actually made money on those calls moving up, and the stock moved in our favor. And so that's kind of typically what we're doing in this account. And the last stock I wanted to mention is apps. This is an ad tech small cap stock, doubled off the lows. We trimmed early and we missed the last leg higher, but here's the lesson. Capital redeployment matters. We moved that money into some other stocks that I'm going to get into later, and we caught some high yield turnarounds. But this is another stock that we've been selling calls into, and as it moved up, the stock has almost doubled, and we're actually break even on our calls that we've sold onto this stock, despite the volatility. And throughout the entire hold, we've reduced our volatility to this name. So the why here is critical. It's not just about which stocks go up. It's about how you manage the positions once they're in your book. So covered calls aren't just income. They're a discipline check. Now, let's be real. Selling calls on every position this year has cost us. So the market's been one way up and we've left a lot of gains on the table. But here's the truth. In markets that don't just go straight up, and they won't go up forever, that discipline pays off and you'll cap the upside today for protection tomorrow. And that's how you beat FOMO and stick to the plan and keep portfolio volatility low. So this week we made two big reallocations, part of our rebalancing. We actually bought into Dow Chemical. So after the dividend cut, sentiment hit rock bottom. That's often where bottoms form. Now we get a 6% yield in our high dividend basket and that exposure to industrials at a discount. We also added to the Japanese yen trade. We doubled down on our diagonal spread. A small 2% allocation is now generating 5 to 10% monthly premium on that capital. That's steady, repeatable income layered into the diversified book. And the way we paid for those positions was we actually sold out of Warner Brothers Discovery because we were in that one from about 10 or 9.50, 10 bucks. And we sold some calls at 14 and the thing got a buyout and ripped in our face. So we finally just took the gains on that, 45 to 50%. Yeah, we lost out on the rest of it, but that's what happens when you're selling calls. So rebalancing isn't sexy, but it's an engine. It's trimming leaders, adding to the laggards, and keeping the allocations aligned with the plan. That's how you stay in control instead of having the market controlling what you're doing. And then here's a deeper concept I wanted to leave you with. So diversifying not just by sector, but by stage. So adding in technical analysis to the diversification process. So a lot of people just like to diversify fundamentally, right? Whether it's different asset classes or different sectors. But I actually like to diversify with technical analysis via the stage analysis. So stage 2 stocks, these are your leaders. They're trending higher. They're strong. They're what everybody's talking about. Think INOD right now. And then stage 1 basing stocks. These are your waiting room plays. They're going sideways. They're hated. They're forgotten. But eventually they transition into stage 2 leaders as the stage 2 leaders transition into stage 3 and stage 4 laggards. So if you only own the leaders, you'll eventually get caught when they roll over. If you mix in some basing stocks, you have a pipeline of future leaders. That's diversification most investors never think about. And so, hey, let's zoom out. What does this all mean for you guys? So 3 lessons. Discipline beats excitement. Covered calls limits upside, but they preserve capital and smooth out returns. Diversification is more than just the S&P 500. Think themes, asset classes, countries, and stages, not just tech versus healthcare. And then, hey, anyone could run with this, to be honest. Like with a spreadsheet, a plan, and consistency, you can manage your own portfolio, whether it's 100K or 10K or 1 million, without outsourcing to anybody. And that's the goal with this channel, is to teach people that they can do it as well. So that's where we're at this week. The account is at 123,742. It's up about 24% this year. The numbers are important, but the process is everything. Hey, if you found anything in this breakdown valuable, please hit that like button, turn it black, and subscribe, and come back next week. So every Friday, I'll walk you through the portfolio, what's working, what's not, and how we're managing it. And remember, wealth isn't built in a day, a week, or a month. It's built by showing up every week, making disciplined decisions, and letting compounding do the heavy lifting. And hey, thank you guys so much for tuning in, and I'll see you guys on the Monday market update video. Cheers. Have a good one.